stocks and help you pick the right stock at the right time. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts in Harihar of HRBV Client Solutions and independent investment advisor Vivek Mavani joins us on the show. But before we start the show, let's focus on one stock which is making the headlines today, and that is Balkrishna Industries. It's down almost 7% in today's trade, 7.5%, and continues to fall to the lowest point of the day. Couple of reasons. So over the weekend, they actually came out with a surprise capex. So 1700 crores is the capex that they will do, out of which 700 crores will be for the US plant. So $700 million, $100 million for the US plant, 500 crores for their Valuj plant, and 500 crores for their Bhuj plant. Now, as far as the US plant is concerned, basically, and the entire capex, 1700 crores, will be funded by a mix of debt and internal accruals. And this is in addition to the carbon black plant that they have. Now, basically, analysts are concerned about the capex. First of all, on the US plant, what they're saying is why go ahead with such a capex when your model is basically a low-cost India producer. So why are you going in for a capex on that front? On the Valuj plant, they're saying that this will incrementally not get you any kind of additional capacity. So what is that happening? Couple of reports. IIFL has downgraded the counter and cut the target price to 1160. They've cut the EPS estimates on account of lower FCFF as well as return on capital employed, and they're saying that the US plant is not consistent with the business model of low-cost production that the company spoke about, and they're unclear of what this incremental 1000 crore capacity and their India plant will get for them. Kotak has also maintained a sell on the counter. They're saying that they find the decision to set up in the plant in the US is very surprising. They're saying India's low-cost labor lends to its main competitive edge over the peers, and they're saying return ratios could come down significantly if more plants overseas are set up, and that could potentially lead to a de-rating for the counter. So that's Balkrishna, pretty much the stock of the day. It's down almost 8% in trade. But we'll continue with Hot Money now. Today on Hot Money, we'll discuss all the pharma stocks. Most of the pharma stocks are doing well in trade. What's driving the rally? Is it here to stay? We'll talk about Piramal Enterprises. The counter is down 2.5% today, but it has a stupendous rally ahead of the meet, financial services meet that it had, and all the news surrounding the demerger with the company said that could potentially happen in the medium term. L&T Tech is trading near record highs. We'll discuss what's aiding the counter. Is there more potential for the counter going ahead? And finally, the ADAG stocks have been doing well of late. We're asking our guests whether any of the ADAG stocks is something that they would prefer. A lot of corporate announcements also have come out on the ADAG stock, whether it be Reliance Communication or Reliance Infra selling their business to Adani Group. So we'll discuss all these stocks and sectors in Hot Money today. Let's start with the first stock, and that is basically what we want to talk about. The first stock that we want to discuss is the pharma sector. Most of the pharma companies have done well. Dr. Reddy's is up almost 4%. Torrent Pharma, Sun Pharma are trading at 52-week high. What's driving the rally? We'll ask our guests. So, Vivek, I'll start with you. Pharma as a pack was pretty much untouchable almost a quarter ago, if you can say. But this quarter onward, there seems to be a big rally. Most of the counters have come to the 52-week high. Is this sustainable according to you, or is this just a rebound from the lows that we've seen? There's nothing fundamentally changed.
Okay, two things, or I'll also extend the discussion to other parts of the pharma sector as well, besides the Sun Pharmas and Dr. Reddy's of the world. If I were to break up the pharma sector into three parts, I mean the Indian companies focused on the overseas markets who have had regulatory issues, so which is where we have Dr. Reddy's and Sun Pharmas and Vocard and Cadilla's, I mean, who have had some issues in the last couple of years, and hence they were battered down. So that segment is bouncing back fairly vengeance and my sense is that the worst seems to be over. Most of them have taken corrective action and seem to be getting approvals for their plants in terms of ironing out the regulatory issues, and new product pipeline approvals, etc. seem to be coming through and likely to come through over the next few quarters. So it is right now in expectation that things are certainly getting better. The other part of the pharma space, which is the Indian companies focused on domestic markets. So there we have the likes of Cipla and Alchem and Ajanta Pharma, etc., who never really in the last 2-3 years had problem. They consistently delivered quarter after quarter, and for them the rally continues. So there again, there are legs to the rally, and that will that I doubt will get interrupted. The third part of it, which is the foreign pharma, the likes of Glaxo, AstraZeneca, Novartis, and the likes the Abbott and all, who had been sort of untouchables for almost 10-15 years. I mean, they had been serious underperformers to the rest of the market for 10-15 years, or for a very long history that one could remember. And 2018, even they have come back with vengeance, most of them coming to multi-year highs, not just 52-week highs, but multi-year highs. And there too, because of internal restructuring, new product launches, some of them have over the years grown consistently, which market just seemed to have ignored. And 2018, suddenly the realization came, hey, there's also a growth area within pharma that one needs to seriously look at. All three parts of the pharma sector now seem to be firing with earnings growth coming back. Most of the issues that plagued them in the last few years seem to be behind it. So my sense is pharma will continue to do well even in future.
Okay, that's the view. We'll get back to Vivek with other stocks that we need to discuss, at least in the pharma space. But Harihar, what's your view? Is the rally here to stay for the pharma stocks?
I think yes, in the foreseeable future, the pharma rally appears to be here to stay. And, of the segments that Vivek was mentioning, I think the one segment where we're really interested is the so-called US business companies, the likes of Lupin, Sun Pharma, Dr. Reddy, which were basically, outsourcing and selling generics in the US market, and who were impacted by the FDA regulations. I think the FDA regulations are more or less, the FDA problems are more or less behind. I think more importantly, the weak rupee is going to substantially help all these pharma companies. So that is going to be a benefit across the board. So we like that specific segment of, likes of Lupin, Sun Pharma and Reddy Lab, which have been already, which are still quoting at about 50-60% below what they used to quote at the peaks about 3 years back. So I think these are the stocks we like. We are not too sure about the domestic place, but I think the US place is what we'll be looking at this point of time.
Okay, so that's the view that's coming in on the pharma space. Vivek, two questions for you. First of all, on the US focused business, most of them have rebounded, but all of them in the commentary said that pricing pressure is still there, and most of them expect negligible growth coming into this year. So pretty much Lupin itself had written this off completely. And second point is that no doubt MNC pharma companies have done extremely well on a low base. This time around the base will be higher, and the rupee, how it's moved, will impact them negatively because of the imports. So your view on these two counters?
Two things. So the likes of Lupin, Sun Pharma, Dr. Reddy's, Cadila, Vocard, I mean, where I understand there are pricing pressures, but the new product launch pipeline approval, which had practically been frozen for the last 2-3 years, that probably will open up, and all of them have a serious pipeline. So probably there will be sort of a bundling, not bundling, but sort of multiple approvals coming in a short time, which probably is the hope and expectation. I mean, it's both hope because we don't know when it will happen, expectation because we certainly know it is going to happen, maybe in the next 3 to 6 quarters. So that is what the market seems to be suggesting, that okay, now things are fine, and growth will come from new product launches. Pricing pressures, yes, but partly will be made up with the currency, which itself has gone down almost 12% in the last 1 year, probably a little more in the in 2018 itself, the 8 months gone by. So that probably will also cushion the rupee earnings to that extent. The second part of your question in terms of the foreign pharma, yes, from a low base they have bounced back. I mean, even some of them have had a fairly impressive earnings growth also, and that earnings growth also is coming after a long period of underperformance on earnings also. So if we look at a Glaxo over a 10-year period, probably over 10 years their earnings didn't grow more than 7-8% on a compounded basis. Now with a product rationalization, restructuring of operations, focus on more profitable products, and so on and so forth, I think double-digit growth anywhere between 15-18% in the near term, longer term 12 to 15% growth for even multinational pharma companies is here to stay. Now that again is the expectation. Valuations, it could be debatable whether they are cheap or not, But right now, whether it is the Indian pharma, whether it is the export-focused companies, or whether it is the MNCs focused on the domestic market seems to be only looking at expectation of earnings bounce back.
Okay, that's the view that's coming in. Vivek, before we move on, so among all the spectrum, if someone wants to invest in pharma, which would your top pick be?
Well, among the export-focused Sun Pharma and Dr. Reddy's would certainly be there. Among the domestic-focused Indian companies, Cipla and Alchem is something that I have preference for. Among the multinationals, it would be a Glaxo and a Abbott.
Okay, so those are the counters that Vivek likes at this point of time in the pharma space. And Hari, if someone wants to invest, what would your top picks be?
See, we would still prefer to operate on the US phase, and our top picks right now would be Lupin is one, and Cadila Healthcare would be the other one.
Okay, any reason why you would not go in for domestic focus? Because growth in the first quarter has come in mainly for companies that have a sizable domestic portfolio, not a US portfolio, and the MNC companies have grown. So any reason why you would not venture them? Do you have a negative view, or you would totally avoid?
No, we don't have a negative view, but we are still worried that pharma pricing in the domestic market can be a little tricky. So we have seen that in the past. So I think that could be one area where we are a little skeptical. We are a little more confident of the US market. There could be FDA regulations, there could be stringent norms, but at least the pricing won't be as tricky as it is in the Indian context. So I think purely on the NPPA and the pricing approach, we would prefer the global players than the Indian players.
Okay, so that's the comprehensive view on the pharma sector. A lot of stocks that were discussed, US focused, India focused, as well as the MNC companies in India. So that's the trend that we are seeing at this point of time. A lot of companies, even on your screen, you can see the stocks that our analysts have quoted as far as their picks are concerned. The other stock that we want to talk about was pretty much the stock of last week, Piramal Enterprises. Today it's down 2.5% in trade, given the fact that this massive rally is rallied from all the way from 2,800 right up to levels of in excess of 3,300. Today it's cooled off. What's the way ahead for Piramal Enterprises? There was this meet with the financial side of the business where they are saying that they are focusing a lot on how they plan to improve the ROEs of the company. A lot of talks about demerger, with the company did admit that it's looking at, but it will happen in the medium term, not immediately. What's the way for Piramal Enterprises? We'll ask our guest. Hari, do you like Piramal Enterprises? What's the strategy here?
From a slightly long-term view, yes, but I think short-term we're a little concerned that the stock has rallied. Don't just look at the last probably few months. If you look at a more perspective view, probably a year and a half, I think the stock has more than doubled in the last probably year and a half. So I think there definitely is some concerns with the valuation. Also, I think valuing at this point of time becomes a little tricky because the last quarter was a loss-making quarter for Piramal. So I think that would also, weigh against the company. So it becomes a little difficult to take a valuation call. I think the only reason we like this stock is we like the number of businesses they are into. But our only worry is that PL effectively is emerging as a kind of a holding company with the entire group businesses. So that would mean that, like a Bajaj Holding, which always gets a discount to the industry valuation, I think Piramal may eventually get a discount in valuation as a holding company. So that is something that will work against that. But I think short-term triggers, we believe that the hiving of the financial services business, I think those are going to be the kind of triggers that they'll be looking at.
Okay, so you think going ahead, demerger probably will be the re-rating factor for Piramal, because they have said it officially that they are looking at it at one point of time. It will happen not immediately, but in the medium term. That's the quote that came out in the analyst meet. How important a trigger is the demerger for Piramal?
See, it would be, as I said, when a company transforms from a operating company to a holding company, I think what matters is what is the value it realizes out of those demergers. So I think from that perspective, it will be important. But as I said, from a very long-term perspective, yes, you really can't lose money on this stock. But I'm not sure what is the kind of upside traction you can get on this stock from these levels.
Okay, Vivek, your view on Piramal Enterprises, is there more potential upside?
Near term, my sense, I would agree with Hari that near term probably the upside seems to be limited after the sharp run up that we have already seen. Longer term, also I agree with him that you can't really lose money if one is taking a 5-year view, and I'm really referring to 5-year view because then two things play out. As far as the financial services business, it would have already by then scaled over the next 2-3 years or 4 years. They would have scaled up to a very serious size. They have built some serious capabilities and carved out niches with limited competition. Real estate funding, mezzanine funding, which not many people in the industry have the domain knowledge, and Piramal has built that domain knowledge and emerged probably one of the largest players over there. Housing finance is a competitive space, but is still a space to participate in because of the sheer size of the opportunity that is available and high ROEs that this segment promises to be. Medium-term triggers in terms of demerger clearly is something to look forward to. Adding to what Hari mentioned, that it will have a holding company discount. Well, if we were to value the financial services business and put it an assumed price to book multiple what other full-fledged financial services companies and take a discount also, well, it's already trading at a discount. And you look at the pharma and the diagnostics business, which is also there as the other subsidiary. And so if you were to arrive at some sum of parts valuation, it is already trading at a discount. If all of the businesses were separately listed, probably the consolidated value of Piramal Enterprises would even today be much higher. So discount factor is already there. The trigger for a demerger or any kind of restructuring to list the individual businesses separately, which could probably happen over the 2, 3, 4 year time frame. So that's where you make your serious money. Till then, assuming the discount factor will continue, you ride on the growth, and the growth is fairly aggressive.
And the growth, you believe, will come in where? On the pharma side, on the real estate side, or in the financial services side?
In the financial services side, including real estate is part of the financial services business. In financial services business, they are building a comprehensive portfolio. It's just that right now, real estate funding seems to be the largest piece, but I'm sure the consumer finance and corporate loans and SME loans and all of it is eventually also going to scale up. I mean, it will enter all those segments where it is currently not present. If they've already entered, it will scale up. I'm sure the ambition is there internally to scale up big time. On the pharma side also, see, the organic growth in terms of mid-teens, 20% growth probably will continue. But there again, Piramal has been in an acquisitive mode, in the sense it is constantly sniffing for acquisition opportunities which either can be a plug and play to the existing business or even new segments that they can enter into which are high margin, high ROE businesses with limited competition within the pharma, diagnostic space, research spaces and all of those. I mean, things that Mr. Piramal has in the past indicated. Growth will come from all these segments. It's just that the big value unlocking trigger is when the big returns will come. Near term, maybe the upside is capped, but long term, you can't really lose money if you're willing to take a little short term pain if in event of a correction in the near term.
Okay, so that's the view that's coming in on Piramal Enterprises. I think the consensus view is that, it's a stock that you need to hold for, a longer term perspective. Demerger obviously will be the key trigger going ahead for the company. The next stock we want to talk about is L&T Technology Services. The counter on Friday was trading at a record 52-week high. Again, it's trading up by almost 1% in trade. So will the momentum continue? What's working in favor? We'll ask our guest. Hari, you go first. Do you like L&T Tech?
It is. I think, in fact, among the tech stocks, it seems to be much more of a niche play. They're into a lot of the growth areas, or what I call the growth side of technology, what I call the hard technology, partially into digital industry, manufacturing. So they're not the typical, hardcore BFSI plays where there was a big concern of a slowdown, as far as most of these IT companies are concerned. So that actually, I think the business model is more de-risked. I think what has happened is that they've been able to deliver numbers quarter after quarter. So that, I think, should hold them in good state. And, we believe that definitely going ahead, the weak rupee should also aid this company, and we like this company at the current price levels. Okay, so that's the view. It's a positive view that's coming in on L&T Tech. Vivek, do you track the company? Do you have?
No, I don't track L&T Technology Services, so I'll reserve my comments at this point of time.
Okay, so we'll open it up for discussion. Mid-cap IT has done extremely well. Vivek, anything in the mid-cap IT space that you like? Most of them have rallied, be it an Elixir or a Hexaware or a Mindtree or a L&T Technology Service. Anything you like in this space?
Well, of course. I mean, mid-cap has rallied far more, and if you look at the valuation gap between mid-cap and large-cap IT, and when I say large-cap, I'm referring to the top 5 companies. So that valuation gap has narrowed significantly. In terms of growth rates, the large and the mid-sized companies seem to be growing at similar rates. So even a TCS is delivering 15-18% growth rate in the, it will deliver in the longer term. Shorter term, it's probably doing little more than that, but of course it's going to average out. Infosys also return of earnings growth to more than 15% is likely and expected. So I would focus on the large cap itself, and within large cap I'll have preference for Tech Mahindra, where I do see greater safety and comfort. Mid cap, after the stellar run that we have had this year, I'll probably be slightly cautious. Probably it can continue to go up, but I have no issues on missing out on that opportunity. But I'll focus on the large cap companies. Okay, large cap company. And Hari, what are the few key triggers? You said you're positive on L&T Tech.
Yeah.
What are the few triggers that probably will? It's rallied significantly. Going ahead, what are the triggers that we need to watch out if this rally has to continue?
See, most of these mid-cap technology companies are fairly vulnerable to the rupee value. So I think as long as the INR remains, in that 68, 71 range, I think most of these mid-cap companies should typically do quite well. Number two, I think a lot of these mid-cap companies are what I call limited client companies, and they're more focused companies compared to the kind of $1 billion orders that you see for TCS and Wipro. So relatively, I think they're a little more fleet-footed, and what will really matter is how they are able to add on more clients to the digital space, because I think that is where the growth is coming. So ultimately, most of these people will have to move into that space. So if the L&Ts and the Mindtrees of the world are able to add a lot more of digital slice to their businesses, I think that would be able to sustain their valuations over a period of time.
Okay, and overall view on mid-cap IT, anything else apart from L&T Tech that you like?
We like Mindtree. I think Mindtree also looks to be a kind of a good play. They are also building their digital capabilities. Early days, but I think that is one more stock we like in the mid-cap.
Despite space. Valuations moving up?
Valuations, I think, are, I would say, probably a little steep across the board, so we really can't complain about that. But I think having said that, probably L&T and this one, Mindtree, look to be the picks among the mid-cap space. Okay, so that's the view that's coming in on L&T Tech and the mid-cap IT space. And finally, a stock that we want to talk about. We don't talk about these stocks too often, but nevertheless, a rally has been seen in most of the ADAG stocks. So we'll ask our guest, would they buy any of the ADAG stocks? That's the straight question that we're asking. And I'll start with you, Hari. Would you buy any ADAG stock? So typically we have been a little worried about this group, because of their performance issues, debt issues. But honestly, if you ask me, there is one stock I would buy is Reliance Infra for a couple of reasons. I think with the Mumbai power business being sold to Adani for about 18k crore, what will immediately happen is the debt, which is a big issue at about 16,000 crores, that comes down to about 7,000. Now, assuming that happens, and we have a company that is now out of par, and I have always said that the best power companies are the companies that are getting out of par. So, the moment Tata Power gets out of par or Reliance Infra gets out of par, I think that is going to be the positive thing. So I think they're getting out of par. Secondly, they're going to focus more on the roads infra business, which is probably the more high profitable segment of the infrastructure business. So I think they still need to build on their execution skills, because if you talk to if you do some channel checks in the market, Reliance Infra does not have a very great image as far as the implementation of projects is concerned. I think they have to work on that, but at least finally they have I would say a base from which the company can start off. So I think at these levels, I would believe infra, if you have a 2-3 year perspective, appears to be a good bet. Okay,
and secondly, with this going out, there's hardly anything left in the company. What more would you bet on? Only on the infrastructure construction?
It's just infra and construction. And I think what they effectively want to do is, once the debt comes down, they would like to plow back a lot of these funds into the infra space. And also on the infra space, their plan is to operate more of an asset-light model. So, knowing the typical ADAG way of approaching, you may find an InvIT coming and the debt being transferred to the InvIT. So you'll see all those structures coming in. But I think the idea is to operate a more of an asset-light kind of infra model that ADAG's plan.
Okay, so Reliance Infra is the stock. Vivek, I think over the past few discussions that we've had on ADAG stocks, I think Reliance Capital, you were always bullish on it. Is the same thought still there? Are you still bullish on the counter?
Oh yeah, absolutely. Because if we look at Reliance Capital, 2-3 things. If you look at performance of each of the business of Reliance Capital, you really have no reason to complain. And if it was not an ADAG company, probably the stock price would have been significantly higher than what it is today. Its last 2 years, it's been singularly a negative sentiment bogging Reliance Capital. And then now if we look at what really is into Reliance Capital, what you have is a Reliance AMC, you have a life insurance company, you have a general insurance company, you have a brokerage and wealth management business, and most importantly, you have a very large NBFC business, which is one of the oldest in this country. I mean, the NBFC alone is about more than 25 years old, which is also, and each of the businesses are growing at anywhere in the region of 15 to 20% year on year. I mean, if you look at some of those businesses, NBFC, I mean, most people don't talk about Reliance Capital, the NBFC business. Well, their asset size, their disbursements, lending activity has doubled in the last 3 years. If we look at the life insurance, the general insurance, all of them are growing in double digits. Each of the business individually generates a return on capital upwards of 15%. The AMC is actually close to 20%. Now, Reliance Capital as a holding company does get a discount. So the holding company return on equity is about 8-9%. But because there are a lot of other investments in the holding company which probably aren't generating as much earnings and which have been put on block either for sale or hive off or whatever. So there is going to be some value unlocking and more cash realized. For all the negative sentiment that goes along with Reliance ATAG, I mean with this group in terms of hanky-panky, each of the business and financial services business is very tightly regulated. So there is very limited room for them to do any hanky-panky, number one. If they wanted to do it, so now I'm talking the intention, well, last 10 years they had enough opportunities to do it, they haven't done it. So what you have is a Reliance Capital, a fairly clean business in that sense. Lastly, Nippon Life of Japan is a partner in most of the businesses, in AMC, in the insurance, both the insurance businesses. And we do hear from time to time that Nippon Life may want to increase their holdings. But given what the valuations are, I'm sure Mr. Ambani is not going to sell cheap. And the only way he can realize a serious premium is ensure that the performance is top of the line. That is what is going to get the valuation. So there is a trigger in terms of potentially Nippon Life acquiring this company or parts of the businesses within Reliance Capital, number one. Whether that happens or not, the performance continues. And today, what do we have? 16,000 crores of net worth, 16,300 crores of net worth as of March 18, and a market cap of 12,000 crores. So that's a 0.75 price to book. Now, 0.75 price to book for all the businesses which are profitable, growing at 15-18%. Well, this is what even an IDBI bank quotes at, and we know what is the state of IDBI bank or any of the PSU banks, a UCO bank or a Bank of India, Dena Bank or stuff like that. Certainly deserves a valuation much more than 0.75 price to book. So these have been my reasons. Stock has underperformed in the last 1 year when we looked at rest of the market or rest of financial services universe. But I would still stick my neck out and say there's a serious long-term potential in Reliance Capital even at 480 levels after a 20% rally in the last 1 month.
Okay, so that's the view that's coming in on the ADAG stocks. Reliance Infra and Reliance Capital, extensively discussed as to why and what are the benefits that is there for these two counters. But with that, it's a wrap on today's Hot Money. Vivek, thank you so much for coming in. Hari, thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.